the only country in Europe to avoid recession, the largest economy in Central Europe, and a gateway to the entire region. The financial market with the largest initial public offering in Europe in 2009. And one of the youngest average age demographics in Europe. Poland, the largest Central European country, has over 38 million people and is one of the most robust economies in the European Union, being the only European country to show GDP growth in the first 3 quarters of 2009. Stable growth and relatively good resistance to the global crisis are both results of strong economic pillars. Yearly growth in exports indicates just how competitive the Polish economy is. Polish consumers, despite the crisis, have increased consumption. The Polish government has certainly contributed to this phenomenon by lowering taxes in 2009 from 40% to 32%. Poland continues to enjoy low labor costs at 1/4 the levels of those in Germany or France. Annual direct foreign investment in 2008 was over 11 billion euro and is contributing to the modernization of Polish industry and services. Poland is also slated to receive 60 billion euros in EU funding earmarked for infrastructure development. One of the reasons for these ambitious development plans is Poland's preparation for hosting the European Football Championships in 2012. The Polish government is committed to an ambitious plan to adopt the euro. It remains one of the key objectives for Poland. Despite these enormous changes and challenges, Poland has proven many times that it has been ready to take on such tasks. First was a long struggle for freedom, which emancipated half of Europe. Then came equally brave and uncompromising economic reforms, some of which were quite painful, but which also allowed Poland to fulfill its dreams of freedom. Economic freedom allowed millions of Poles to establish their own businesses. Currently, the Polish government is completing a privatization plan. The strategy for 2008 to 2011 covers over 800 companies from most sectors of the Polish economy, including finance, energy, coal mining, chemical, and petroleum. The strategy is expected to generate 37 billion zloty in 2009 and 2010. Energy sector privatization is a priority. The Polish electricity market is one of the 10 largest in Europe in terms of capacity. At the end of 2008, it stood at nearly 40 gigawatts. The perspectives for continued growth are strong given the relatively low electricity use in Poland, which, in per capita terms, is less than half that of countries in the old European Union. In 2009, Polish Energy Group, the largest power holding in Poland, offered investors shares worth a total of 1.5 billion euro. The IPO was enthusiastically received by investors as shares were 7.5 times oversubscribed. It was the biggest IPO in Europe in 2009. Alongside the energy industry, privatization of the coal mining sector has also begun. In June 2009, the Bogdanka coal mine had a successful IPO, thereby opening the way for further investment in the Polish coal mining sector. Similarly, in the case of the chemical sector, the privatization process has started with IPOs. Consequently, chemical companies are being offered to investors within the sector. The Warsaw Stock Exchange, with its 377 listed companies and a capitalization at 320 billion euros, has begun its own privatization process. It is the largest capital market in the region, attracting both individual and institutional investors. In October 2009, PKO BP, the largest Polish bank, issued new shares worth $1.8 billion. 99% of those with call options chose to exercise them. In 2010, the ministry is planning to privatize PZU, the largest insurance company in the country, which has the clearly defined goal of being the market leader in Central and Eastern Europe. Polish privatization plans include practically all sectors of the economy and all regions of the country. From dynamic Warsaw to the university town of Krakow to the window on the world that is Gdańsk.